Here's what Bitcoin order book and order flow data are telling us about the market. Hey guys, it's Keith Allen. Yeah, I'm back. Don't call it a comeback. I never left, but I have been super busy and been trying to get a read on this market. And today, we're going to talk about the clues that we're getting from the order book data. We've obviously got price pinned in a range, really kind of a critical range, in my opinion, as we're sitting here between, like critical support and critical resistance. I mean, like trend defining resistance, I would say. So we're going to start. I'm going to give you a quick overview of the candle chart so you can see kind of the technical analysis aspect of this, of where we're sitting and what levels we need to keep an eye on. And then I'm going to show you in the order book, both the order book data and the order flow data that is going to clarify some things for us. Oh, I see we have the wrong overlay here. Let me do that. And okay, so it is morning. It's okay. It's still valid, but this is the bit break. And if you're new to us, I really, really appreciate you joining me. And if you're a longtime follower and supporter, I really appreciate you guys. If you would do me a favor, help me grow the channel, smash all the buttons, especially make sure you hit the subscribe button. That's the little bell up top in the upper right-hand corner so you don't miss any of the future streams. And also want to let you know that live chat is open. I love engaging with you guys. Those are our absolutely best live streams. So if you have questions, I'll do my best to answer them. If you have insight, please share it with us. We enjoy that. So if you're not in a situation where you can engage in the live chat, and you want to leave a comment either on YouTube or on X, I'll go back and I'll engage with those later. I promise you, I engage with each and every one of them. All right. So let's just climb right in and take a look at what's happening on the candle chart. I'm going to share the screen here on TradingView, and we will go to let's go to this guy right here. And there it is. Okay. So this is Bitcoin daily chart. Lots of lines here. This is actually a new indicator that we're testing out. It's called Timescapes, and it shows us quarterly and annual opens. We can actually set it for any time frame, but really the valid ones here are annual and quarterly. And so we're going to look at that relative to the technical analysis because it's real important. As you can see, we do have some correlation here with the this would be the quarterly open right here. This is the 21-day moving average, which has perfect confluence. And you can see that we have, when we first lost this level, it took us a little while to break back in. We did break back above it, reclaim the 21, ran into resistance here. This is the trend line. So let's zoom out on that a little bit. This is the macro trend, right? So we are technically below that macro trend, but the reason that we're not in panic mode here is because there are some things that are promising here for Bitcoin and the broader market. So, we could speculate on why we had these rejections. Let's see, that's 1, 2, 3, 4 consecutive rejections and met with a new trend precognition down signal. This is a daily signal. Okay. So keep in mind that these arrows literally only refer to the current time frame on the chart, right? So if I'm looking at this on a weekly chart, it's going to be a different scenario, right? On the weekly, we've got a long signal. This basically means that price is not likely to drop below this low, which was last week's low at 74.5-ish, right? Depending on what exchange you're on, 74.4K. And on our daily time frame, we have a this is, so consider this intra week, right? The weekly says we're not likely to go below this, and the daily says today we're not likely to break the trend line. Okay, we're not likely to go above this. Now, those signals can invalidate, of course, and in a manipulative market like we're in, we see that happen from time to time. But I think we're in pretty good shape here. What's most frustrating is to see price pinned between the 21-day, this is a very tight range, the 21-day moving average and the 50-day moving average, I mean, there's just not a lot of room to trade here. This is what 82. The 21 is at 82.7K, and the 50 is at 84.2K. If you were going to scalp this, you've got less than 2%. There's just not a lot of meat on the bone. And if you were to, if you want to play the game, if you're a trader, and I guess it's important to really look at this from the perspective of a trader versus an investor. Okay. As an investor, these things, this looks like we're in a good support range. This looks like, there was a lot of market panic and fear here, and a good buying opportunity. Typically, when those moments happen, those are good buying opportunities. Now, in my opinion, this whole range here from the trend line remained and remains an interesting buy zone if you haven't already done so. If you're an investor, I would look for opportunities to go to these key support levels, whether it's here or whether it's here or whether it's here. None of this is off the table at this point because, and why? If we wanted to speculate why the market is doing this, I would say that most signs point to uncertainty. And the uncertainty is pretty much 99.9% based around tariffs and economic uncertainty of what this administration is doing. Now, speculating on that doesn't tell us what to watch. It doesn't tell us how to trade. Okay. Watching these key levels is what's going to tell us, if and when we're going to get a breakout or a breakdown. And so that's what you watch. Now, in terms of being an investor, this might be a decent range. If you are a scalper and you want to, you want to trade this, then let's look at this in kind of a risk reward setup. Okay. Price right now is pinned right in the middle of these two moving averages, right? There's not a lot here, right? Risk reward on this, the technical term is no bueno, not good, right? So if you were to take it up to the trend line, okay, that's a decent scalp, at least if we can make it back up there. And then, expecting more resistance at this 200-day moving average, and again, resistance up here. But obviously, the risk reward gets better as we go for those higher targets. If you're looking for a swing trade, the problem is we don't know when we're getting here, and but there are places to find signs, and for that, we're going to look at the order book. And with fire charts, we have visualization. We have a data visualization tool that is showing us not only where bid liquidity is and where ask liquidity is and where it isn't. It's also showing us where it's moving, which helps us identify developing trends before they're really glaring us in the face, before we have those confirmations. And the bin CVD gives us an indication of what whales are actually doing here. So I'm zoomed out to a monthly perspective. And if you see all this, all of this crazy movement here, this is the entity that I've affectionately dubbed Spoofy the Whale. And so one thing you can bank on is price isn't going to break this until it gets moved, right? We're not going to break this level until it gets moved. Now, here's something else I know about Spoofy, and I've been tracking this entity since like March when it started. And we can go back, potentially, we can go back and look at that here on a longer term chart and see that we've seen this behavior happening literally since the beginning of the first week in March. Up, down, up, way up, down, up, and you see how price in most cases reacted to it. Okay. So this next move and I'm of the opinion that this double stacked level here is spoofy, and that this is a protective buffer. If this part gets hit, they'll likely pull it before it gets completely filled. But even if it does get filled, they would have a chance to pull this before both of them get hit. And that's been the game that's been played since early March, as I've said. Now, there were some times where Spoofy was filling bids here, and that's what gave us some indication that they were going to let price move up, and that happened. And you can look back in history at some of the other streams and see that. So, oh, looks like we got somebody popping into the chat here. Lore, would be nice if, say, the USD value of the levels to break would be nice if the USD value of the levels to break, impossible to see from here. Okay. These are the USD levels here on the right-hand side. Sorry, if you're on a small screen or looking on your phone, it might be difficult. But and with fire charts, we can also hover over it and see where each of these levels are. This is essentially 91 and change, actually closer to 92. This is actually, this is 92. There's 76 million stacked at 92 here on this resolution. If I drill down into a lower resolution, we'll see the binning change a little bit. So the values will change a little bit. So again, at 92, 71 million at 92, another 38 million of insulation at 88.5. And those levels, let's see how they correlate with the technicals. All right. So that 88.5 is actually slightly above the 200-day moving average. And the other block is slightly above the 100-day moving average. Let's see what they look like on the weekly. On the weekly, okay, so it's protecting that 21-week moving average, as I thought. And then the other part of it is the 88.5 is protecting the trend line. So this is really where the technicals come into play relative to what we're seeing in fire charts, right? The liquidity that Spoofy has placed is blocking access. It's blocking the ability for price to climb back into the trend, to reclaim the trend, which makes the market nervous. And it's blocking this very critical level, which is both the 21-week moving average and the 2025 open. So there is technical confluence with where these asks are stacked, and do not expect price to break them until they move. Now, in Spoofy's game, sometimes the entity will move these asks lower. Sometimes they'll move them higher, and from time to time they pull them ever so briefly. And so keep an eye on that. And that's something that we watch every single day, and something you can watch 24/7, 365 with a tool like fire charts. If we drill down to this, so actually before I do that, what I want you to notice here, and I think we have I thought I posted this the other day. I don't think I actually got around to it. We have essentially a double bottom here, right? We dipped down to that 74.4K range. We came back. We almost made it to that same level. It's close enough to a double bottom here. You can look at it here on the candle chart, and let's go to the daily. No, I don't want to leave. Let's go to the daily chart here, and we could see it again, right? So essentially, we've got a double bottom right here, right? So what I want to show you on the order flow down here in the bin CVD, and for anybody new to this, you can see. By the way, my pleasure, Lore, and thank you for joining me today. Appreciate that. So let's call this a double bottom, and look what happened around this time. Okay, so lots of this was tariff induced, right? This is when Trump came out with crazy numbers. The market panicked. We saw a sell-off in TradFi. We saw a sell-off in crypto, and whales started selling, And then they started buying. They bought this range. And so I'm going to isolate what's happening here. Blue is the sum of all order classes. That's actually, true CVD. Um, green, uh, well, let's go level by level for anybody new. The yellow class, smallest orders in the bin, $100 to $1,000 orders. Back in the olden days, we knew this was retail. Nowadays, we see institutional players, whales, using this order class a lot as well, sometimes to TWAP. Why do they do that? Two reasons to do that. Number one is because in periods of thin liquidity, it is advantageous to make small orders so that you don't have any slippage. Number two is when they're running a TWAP strategy, they can make small orders and they can do them rapidly over time and generate a significant amount of volume to dollar cost average a position in or out. And the other reason is simply to disguise what they're doing. A lot of times we'll see that yellow class counter trade the other order classes or counter trade whales. So yes, retail lives in yellow, but whales can disguise themselves as any of the smaller classes, and they often do. So there's that. Green, $1,000 to $10,000 orders. Also, largely retail. And things, we escalate from there. Red, $10,000, $100,000 orders. Purple, $100,000, $1 million orders. Those are our whales, and our mega whales, brown orders, 1 million to 10 million. Now, something that you need to know is it looks here like brown has bought a lot more than purple has. And the reality is, in the normalized view on the bin CVD, on the normalized view, we're basically just amplifying the moves to make them easier to see. But in reality, each order class is binned, and the normalized view is relative to that specific order class. So what you can see here is up until the beginning of April, when we had this dump, whales had, these brown mega whales had bought and sold, well, the maximum amount, right? You see that bottom value, 1 million to 10 million. These are arbitrary units. It's normalized, but they've sold 100%. It's down at a zero value, which means they've sold 100% of what they had, of the volume they had purchased within that time frame. And then since then, they're now up to, they maxed out here at 1.0. That would be 100%. And then they've rolled off of that. They've sold just a tiny bit. They've sold 9%. Okay. And likewise, the purple whales, which have historically dominated Bitcoin price action, they have not bought back at 100% level, right? They've reclaimed only about 47% of what they had initially had at the beginning, right? So they're buying their way back in, but they're buying dips and selling rips. So there's it's not like this is one entity. There are many whales in this class, and some might be accumulating, some might be looking for exit liquidity, some might simply just be scalping, buying dips and selling rips. And I think there's a lot of that going on, as there always will be. And then blue is the sum of all the above. And what you can see is the sum, in summation, when we got around this double bottom, all the order classes had dumped what they had purchased in this time frame, and then the buying began. And so far, they've bought back a little more than 21% of what they sold. Right, so they're buying back in incrementally, slowly, patiently, in a tight range. Okay. Now, if we switch this over to absolute value, we can see what the real values are here. And as I mentioned, it looked like brown had done the most volume relative to the other classes, but that was just the normalized view. It was relative to themselves. In reality, brown has purchased 15 million. Doesn't sound like a lot um, in a month's time to be net positive 15 million. Now they bought, they sold, and then they started buying back in. So since they sold all that volume, they came back down to 15 million. Whereas purple whales showing they're still not net positive for the time frame. However, currently at negative 329 billion, but where were they at the low? Okay, so they have bought a little more than 300 million back. And as far as the sum of all of the order classes, if we bring them back in here, we can see that since we double bottomed here and the buying began, and yes, there was an initial pump and a relief rally here. Since that point, when the net was down, we'll say negative 2.2 million, or excuse me, negative 2.2 billion with a B, to now 1.7. So roughly 500 million, $500 million has been purchased back here via market orders. And again, these are only market orders. So if you go, oh, it doesn't sound like a lot of volume. This is just market orders. So that's a fair amount here in a very tight range, I might add. And so what we can take from this is, number one, just in a visualization of the order book, we can see strong resistance at key technical levels that we pointed out on the charts, right? We have the trend line and we have the 21-week moving average and yearly open in this range. Okay. So this is blocking what we know is critical trend defining technical resistance. So you could, if you're looking at the candle chart, then okay, so we've got these technical levels up here, but hey, maybe it's going to pass. Maybe today's going to be the day that it goes past this. Maybe today's going to be the day that we clear this level, and today's going to be the day that we clear this level. Well, guess what? Here it is on the weekly, right? There's that confluence that we were looking at. Maybe today's going to be the day that we pass that. Well, guess what? If we look at the order book, we know we're not freaking clearing it until this moves, until this either starts to thin out, or until we see bulls just stage an absolute coup and attack this with veracity. And quite frankly, I see it getting moved before it gets eaten. So simply by keeping an eye on this, we can tell when it's going to be time. And the other thing is to watch where liquidity is developing, right? Watch the movement. And if we zoom out, we can see that bids have been stair-stepping up. And even from down here, right, we've seen a little bit. It looks to me like this is a ladder, 1, 2, 3, three-rung ladder that was fortified from liquidity that was moved from here. So consider this a move up. A little, very subtle bit of volume coming into here, another couple of $1 million coming into this level at 75K. The range to me at the moment is 75K up to 88.5. That's the range we're pinned in at the moment. I'm watching to see if we have more coming up into this range above 75K, or if we start to see erosion in here. Obviously, we're seeing some suppression right here at this level. I don't get the, I don't understand the strategy, to be honest with you, with doing that, other than maybe somebody's got shorts that they're trying to protect here. That's certainly something that we see happening a lot. So they're trying to push this down to capitalize on shorts, and we have bid liquidity moving up. So it's a battle here, right? So how do you trade this? Well, again, this goes back to whether you're an investor, whether you're a trader. If you're an investor, then you probably see this as a pretty decent buy zone, because it sure looks to me like whales, even though there's some profit taking going on in the process, it looks to me like whales are quietly accumulating in this zone since really only for the last week. So it- a week does not define a trend. These are just early signs of what we're seeing at the moment. Okay. So, so this is kind of an in the moment indication of what appears to be developing. Obviously, one flush can change that. But at the moment, this is where we're at. So I like what I'm seeing here. Is it happening as fast as any of us want? No, absolutely not. It isn't. Um, now, I would say that if you are going to trade this, you really, really need to manage your setups. You really need to manage your risk reward. If you're attempting to short this because you think that the market is going to dump further, it very well might. We might get that, but at the moment, it looks to me like you should be, regardless of if you're trading, if you're shorting, don't be greedy. If you're scalping or swing trading, don't be greedy because you're going to get nailed. So take those profits conservatively, take them quickly, and recycle them. Compound your stack. Okay. If you're going to trade it this close and you're going to trade in a tight zone like this, I personally don't like to scalp when we're like this. I saw some opportunities. I bought down here, and that goes into my long-term investment stack. That's not the same as what I'm doing with my trading stack. Okay. So my trading stack is like, man, there's just not enough meat on the bone for me for the way that I like to trade. So I'm sitting on my hands in terms of trading. I've attempted to trade some alts, and some are doing okay, some not so much. I've been slapped around by Litecoin. I actually am in a decent Litecoin position at the moment. We'll see if that continues. That's one that I'm actually okay hanging on to for a little bit. But I just don't know. And here's a quick view of the Litecoin chart. I just don't know if we're really there yet in terms of going after alts. You can scalp them because they are volatile. But again, you can't be greedy. I had a scalp on Solana last week or over the weekend, and it went positive, and then it very quickly went negative, stopped out, and it was a tight stop, so it wasn't a big deal. But nonetheless, it pisses you off, right? You're hearing all the good news, you think it's good, and then it retraces. I'm trying to trade smarter. I'm trying to trade conservatively and preserve my stack. I'm trying to stack more powder so that if we do get another dip, I've got more. I still have some set aside to buy a dip down to potentially, that 69 or even 65K level for Bitcoin to add to my long-term stack. But I'd like to stack some more powder to be doing that if I can. So that's why I'm interested in some of these alts, but I'm interested only in quality alts. And I know that's kind of an oxymoron. But in terms of Litecoin, let's see what we have here. I'm going to take this to a weekly chart and see if we can eliminate some of the noise here. It's kind of a similar set of circumstances, although at least Litecoin is above the trend line. So that's where I have some comfort. But it's still having trouble breaking these technical levels. At least the moving averages are starting to unwind. At least the 21 has unwound on the weekly. What's the daily look like? Daily's still pretty wound up. Okay, so there's a lot to happen here, and we're obviously still trending down. So maybe it's a little early to start messing with these alts. I'm going to keep the focus here on Bitcoin for the moment because that's what this stream is about, and I think this is what the broader market follows. So I hope this gives you some insight. I hope this helps you understand the value of tools like order book data and order flow data, and the data visualization for me, a guy like me who gets intimidated by staring at fast moving numbers, trying to figure out what's going on in the order book. I like looking at it in a manner like this, where I can see exactly at a glance where that resistance is, where that support is, and where it's moving. So I see the developing trend. And to me, the developing trend here is a quiet and subtle accumulation by whales. as we hang in this range. And we're going to stay pinned in this range until Spoofy decides to make a move. Or whales, we get a piece of great news, and whales charge after this with veracity. Hope that gives you some insight. Hope that helps you make some smarter trading decisions. And if you haven't done so yet, hope you'll join us in our amazing global trading community on Telegram. Links to all of the communities, links to the tools are all in the description. Thanks again, guys. I really, really appreciate it. Look forward to engaging with you. For those of you who left comments on X and YouTube, I will chat with you there. Have a great one, guys.